Yes, we had a monthly move, we had a daily move, and we had a weekly move all in the same area today. And wow, would you just look at it? Would you look at it? It looks pretty awesome. The fact that we're able to take these moves, we're able to go almost tag right on the weekly move, but that gets us outside of the daily move. So we pull back down into the monthly and we use that as resistance multiple times as we overall pull. My goodness, such an interesting day and great levels to pay attention to, especially if you were there in the morning. As yesterday, we were stating that the 30-minute curling up here would signify, hey, we should see an upward move to the daily expected move. That was able to take place. So we need to give you updated daily expected moves. That's right. These are not the updated daily expected moves. And we're going to discuss today how we could be walking into trap number 2 or how trap number 2 could already be formed. And we are ready for some kind of big trap for this monthly expiration for September. So let's get into it. Now, in order to give today's information in the most helpful way possible, we do have something to discuss with the daily expected moves. And we actually just posted all of the daily expected moves for all the stocks that you see on the right side of your screen. If you want to freeze it and see if your stock is over here, we do have daily expected moves that we give out every single Friday. We give out this full list, but there's something key here that we have to kind of just take our time with, which is just something interesting, which is the fact that the SPY only has about 7 to 8% implied volatility going into tomorrow. And those moves I will read off right now. We have 664.93 to the upside. Very difficult to see. I think we are very likely to try to come to this level again. We'll talk about that in the really short time frames, but be prepared. And then we have 659.59 to the downside. Make sure to pause and get these on your charts. Now I'm going to switch over to the Q so you can see there's only 7 to 8% implied volatility for our 68% zone, right? 32% chance to close outside of it. But as I calculated the Qs had still upwards towards 17% implied volatility, which is very interesting. And when you look at all the calculations for all these moves, they're still very elevated, but the SPY is not. That is a little troublesome, and we will discuss that in a moment after we read off these moves. So bigger zone here for the Q. So I just want you to have these on your chart, especially if you're not part of Patreon. Make sure to get the free ones. Make sure to get the SPY and the Qs, these red lines. 633 to the upside, 590.31 to the downside. Once again, this is a 68% zone for tomorrow with a 32% chance to end outside of them. One thing that I would be looking for from the Qs is if we get there and you see the SPY break through their range and things like that, that will make total sense. But let's actually talk about this little phenomenon for a second. Why would there be a big difference in implied volatility for the SPY than the QQQs? And some of it could be, hey, there's different things in the SPY. So maybe the risk and rewards and the implied volatility there is just different because it is tech stocks in general. Or maybe people know that something for tech stocks is coming out that isn't necessarily showing up in the SPY data. Either way, when this happens, the only thing that I could say in my trading history when I've seen these type of moments, especially on an expiration, anytime you see something that looks a little funky to you, you want to be a little bit cautious, right? It's kind of like if I'm walking down an alleyway late at night that I always walk down, but I see something a little bit different, I might be a little more cautious. We've gone into plenty of OpExes. We've gone into plenty of these every single month after expiration. And to run into something like this is a little bit different. So just be cautious of the SPY. There could be a trap being set as of tomorrow is what I wanted to discuss. Now, if you've been watching these videos, we've been talking about how the trap number 1 could be done, and we are setting trap number 2. And the truth is here that as we get into volatility, after we get through the SPY and the Qs, we'll go over to volatility to discuss it. Trap number 2 could be forming. It could be done as far as tomorrow goes. We can hold sideways and things like that. But what we're looking for here is a divergence on the 2-hour or a lower high. But right now we're forming the divergence. So you can see the rejection starting to take place here, but we have no confirmation below the 9-day moving average, or the 9 on the 2-hour. My apologies. This red line coming up is a 9 moving average here. So it's just an SMA. So this is what we want. We really want this to come down and close below that. We don't want this to come down below that and then bounce back up. We want that to close below that, see a surprise, maybe get a reaction to retest the 5 and keep going. That would be fantastic. But overall, we are looking for the actual rejection, and we don't have that yet. You are slightly rejecting from the MACD. You have shown an actual divergence here for the RSI. We can see that that has completed as of right now. This is going to be your earliest signal. So if you are taking it based on just the RSI and no other confirmations fully, just know that you should really be paying attention to position size and make sure you're comfortable with that amount, because you are taking it with not the most information confirmed. Okay, the confirmation that we would really like to see here is the price action actually giving us that red negative bar below that 9 on the 2 hour, and then we would like to see carry that below the 5. Now, why is this important? Why is this divergence important? Well, because we're making that next daily divergence right as we go into OPEX, right as we go into quarterly OPEX next week, right as we tag the upward monthly expected move. So we can't go much higher with a 68% chance for the month. So what are we going to do? Well, people might take profit. We could remain in this area, right, into September 30th to build liquidity before a big drop. But either way, this is a very mean divergence. And so the fact that we have made a 2-hour divergence, even on the RSI, is a big deal. Okay, it's going to be a very, very big deal. This means that we could see something crazy as of, I would say, up into Tuesday is where I'm really paying attention. But the 30-minute chart here is what I wanted to discuss as well. I think that people could consider this right now, and they could say, hey, we could have that top in now, right? We were discussing on Patreon this morning, we gave an update suggesting that we may need to remake those signals, and I think that's a possibility. Now, the 30-minute has confirmed here, and we held these divergence points. So technically, that divergence is still intact. And if this wants to, this is suggesting that we have a high probability to curl down the 2-hour chart. So I would not hate on anyone. I would not really disagree. I wouldn't be able to disagree with the technicals if someone was saying this is a reversal signal that has confirmed. That is the truth. Now, what likes to happen on OPEX is we like to leak it out for as long as possible. So something that I am paying attention to for tomorrow, two things that I'll give you as far as the SPY goes, and we'll go to futures. I'm looking for this 15-minute to maybe go up to that daily expected move, see that resistance again, and then we kind of see that confirmed down. The problem is I don't know what kind of news we would get tomorrow. It would kind of be like random or a delayed reaction to the Fed interest rate decision and the press conference. So this could be a delayed reaction that we're seeing. We're just allowing markets to hold ups for rich people into OPEX. That happens all the time. So something that I would look for here, if you get lucky, you might see a 15-minute divergence. And if that confirms during market hours, that would be a great sign that we are going to attempt to reverse down this thing. And we might start to see that top right now. Now, the next thing I will give you is the futures. I like SPX 500 here. I think that this would be very good to watch as well. A 30-minute divergence here, just like the 15. If you like this, that would be very, very nice for that. And then the other thing is the 2-hour confirmation. If you really look at this 2-hour, which is equal to pretty much the 30-minute chart for the SPY, by the way. You see the divergences forming here. You see the new highs. We see all those lows coming in, and you have had divergence ever since September 11th. So ever since September 11th, you have formed those divergences, and you are starting to complete a lot of those. When this MACD confirms, it means risk is going to be heightened. That means that if you are thinking that this market is going to scream higher, you better have the confirmations for it, because if these things do happen, if these things do confirm, and in fact confirm today like they did, if the 2-hour is really going to give us the full rejection with the price action here, I would be very cautious to the upside, because I think you're going to get all of your gains ripped away from you. Now, I know I was giving the full take on the SPY, but the Qs are in a similar boat, and I want you to really watch the Qs. Look at the Qs right now. We have a 2-hour. We have the MACD with the divergence. So now are you starting to look into that SPY divergence on the RSI just a little bit deeper? You think that could reject? Maybe you're paying a little bit more attention to a trap tomorrow. I don't know, but this thing actually does have the divergence on the MACD. Not confirmed. Want to be very clear about that. This does have it on the RSI. It is confirmed. The problem here is that is the early signal. So you do not have confirmation with the actual price action. And that's okay. Like, I totally understand people doing what they want to do with their money. That's totally understandable. I like to wait for confirmations. Now, you did get a confirmation here on the 30-minute. So I can't even disagree with you. And the only thing, actually, it's flat here too. So I really can't disagree with you. The only thing that's troublesome is you do have this good wave of buyers. You'd have to take all of this out for it to be bad. You do have the opportunity to extend this a little bit longer as we go into some housing data. I believe housing data next week on the 25th. So you do have the opportunity to create like signals in the near price action. So just be aware of that. And you have levels to watch for those divergences. But for now, you would say, hey, maybe this 15-minute gets a little reaction like this. People are euphoric in the morning, and then something funky happens on Friday, and this OPEX is just a sell-off as people take loads and loads of profit. So the 2-hour chart is going to be the most important confirmation here. Once again, if this 2-hour confirms down, we can continue to go the upside, right? We're going to take it one day at a time. That's why we continue to update you on Patreon and on YouTube. We'll pay attention if things are curling back up. We'll pay attention if things are going to squeeze again. We'll pay attention if these things fail. But for now, you have a 2-hour divergence right here. And if this sees a wave of selling that takes you below these points, like you actually see that wave of selling with the divergence come in, you can confirm this daily chart. This is daily divergence really close to the center line. So I would be cautious, because as you might think that we are going 20% to the upside into the end of the year, I would be cautious when you're about to get a weekly pullback. And you can see the same thing from VIX, just loading up, ready to see some kind of move here for the weekly chart, sitting right by that center line for the RSI, just waiting. And why do we keep bringing up this weekly chart? How volatility will most likely come in for the next few weeks, maybe even a couple of months if it really wants to. Well, the daily signals, right? These daily divergences have added up for a long time. We are just seeing them complete, and we are not wiping them out, right? None of these points have wiped out divergence, never. So we have continued to squeeze, but we have continued to hold the divergence points, and that is very important, especially right now. This is the reason the sell-off could just start at any moment. It really could. It could start anytime from now into September 30th if they want to move this market sideways. But I think it's potentially going to happen after. I think the trap might be set tomorrow, in my honest opinion. That is my opinion. Obviously, you want to pay attention to confirmations and make sure that you're trading based on the information and the proof of the market in front of you, not what you think or what I think, but the actual things, the actual confirmations happening in front of you. What were we paying attention to for volatility? The 2-hour chart curling up into positive territory. Now, this is going to be a very weird look, but we are mentioning on Patreon, watch for the 2-hour. If the 2-hour curls up, that's by the center line, which means what? Make a new high. If you're going to see a new high, you might see a new low in the SPY, and we can start to get this daily chart going. So the 2-hour chart here, if that's able to curl up, risky for assets. The 30-minute chart is what we are suggesting to watch as of, if you can get into this early, if you want to see if that 2-hour is going to curl up, big volatility spike coming in. Well, we would like to see what? A 30-minute higher low or a 30-minute divergence. And I think you have a good shot at making a divergence tomorrow, right? I think you have a good shot at this MACD rolling down for a bit, then just curling back up, and we see a divergence down here tomorrow, and we see that thing turn around. If we don't see divergence down there, then you don't see divergence down there. There's no trade set up as far as getting in early to the trade. But what does a divergence mean? Let's bring this back to the SPY at the end of this video. What does a divergence on volatility mean for tomorrow? It means tomorrow we could see an upward move. Tomorrow we could see that 15-minute divergence form. Tomorrow we could see this go to the upside, make a 15-minute divergence, while at the same time volatility over there is making a 30-minute divergence. And guess what? The 30-minute divergence would just unconfirm, reconfirm again. So we will be watching this very, very carefully. I don't see data as far as right now that is important coming out tomorrow. If you know of any speeches or anything like that, I would say around 10:30 a.m. Central Time to 11:30 a.m. Central Time. That looks like the proper timing for this if you wanted my opinion on timing. So just be watching out with this expiration, guys. We can always squeeze up for into September 30th for the quarterly OPEX, but monthly OPEX might be done. We made it to the monthly expected move. We have reversal signals. That's what the market is telling you. So be cautious if these 2-hour signals start to confirm and or start to fully reject, right? We see the confirmation below the 9 on the 2-hour. Hey, thank you guys so much for watching this video. Once again, just trying to put this information out there to be as helpful as possible. I really want to give back to people just like me, people who learned mostly on YouTube, people who just learn and are trying to absorb as much of this as possible. That's what I'm trying to do. I'm trying to give you things that actually can help you understand what are the good things to pay attention to, what are the bad things to pay attention to. And so at this point, we have made the decision making area at the monthly expected move, which means you have decisions to make. Are you thinking that this market can go higher and you're going to YOLO all this thing to the upside? Are you being more reasonable and taking the signals into consideration and saying, we are very likely to see a weekly pullback here, so I will take my profits and wait for the pullback? Or are you saying, hey, maybe I'll take some profit, but leave some runners just in case? That is what the monthly expected move means when you get here at some point in the month. So I hope that this really helps you out, guys. I hope you have a great rest of your week. I hope you have a great trading day tomorrow, and especially have a great night with your family. All right. Peace out.